name's Dina Jalbert. I'm the founder and CEO of Align. We are a mergers and acquisitions advisory firm headquartered here in Orlando, but we have offices nationwide. We've been in the cannabis industry for about a little over 2 years now, which I guess makes us kind of what is it? We've been grandfathered in. We've been around a while. Anyway, we're currently representing about $500 million in M&A transactions right now in this industry. So we have worked across the entire supply chain, everything from cultivators to ancillary businesses, hemp, CBD, THC, and anything across the spectrum there. We've done private placements, and then we do mergers and acquisitions, exits or acquisitions either way. So that's us.
Great. I'm Holly Ford. I founded a company called Zarian Firm. They're an international business brokerage and recently partnered with Cannabis 10X and placed the two companies together. We specialize, we're obviously an M&A firm internationally. We're representing over $500 million raise in Canada right now, and as small as $500,000 for people that are starting up. So we run the gamut. But what we specialize in is taking our clients individually and working with them to find out how they really want to move this and expand their business. The goal is expansion. What does that mean? Do you want to give up debt, right? Just 12%, 20%, whatever that is. Do you want to give up equity? Or you want to just do some profit sharing, some creative financing? So we work with our clients to do that. But we've also found that there's other avenues to get that wealth that doesn't require a dollar out of your pocket. It doesn't require any equity, and that's in franchising. So I have a strong background in franchising as well as my partner, and that is a vehicle that will generate wealth without having to get the capital raised. So it's kind of what we do.
Hello, I'm Dion Kellier. I am an attorney with the Hoban Law Group, and I have my LLM in taxation. And Hoban is out of Denver, and we are a cannabis firm, so we do everything that has to do with the cannabis plant, hemp, marijuana, CBD.
That sounds good. I'm Jason Trofe, also with Cannabis 10X. We help pretty much multi-state operators grow their footprint. So let's start with a kind of a basic scenario that I think covers most of the people I think are in the room, and we'll take in some questions. Raise your hand if I'm going in a direction and you'd like to hear something a little bit different. So raise your hand, please participate. So if we start with a scenario here on less than $1 million, and let's start with maybe some solutions for a pretty common scenario, and start with some maybe debt again, and then let's go from there to seed rounds, and maybe explain how they can do Series A and so on.
Okay. I think you said it very well at the beginning. There are many ways to kind of initially fund your business, and so you really have to think about what you need and how you want to do it, because the avenues that are available to you are all very different. So they're going to have a different outcome. And so you have to start with knowing what your goal is in mind. I meet a lot of business owners that say, I'll just take the check. I don't really, right? I don't really care how I get it or who it's from. And so I would say that in this scenario, the first thing that you want to do is really think about how much you really need, and not just what might be available to you or what might seem easy, but what do you really need? And then once you know that, you can determine, the best route to go. So debt is an option. Carries with it interest, with the banking constraints that still exist. Traditional lending is difficult. However, there are many now popping up in the industry that there are alternative lenders who are specific to the industry and are actually doing more traditional debt lending than they have historically in the past. So we're starting to see that free up a bit more. And then if you were maybe not interested in debt and you wanted to look to equity financing, as he mentioned, you could seek now if it's your seed round. If it's less than $1 million, I'm guessing you're just getting things started, and so that can come in a just wide variety of types. There are angel groups specific to the industry who do funding to help start up businesses in the space. But then there's individual investors who are very interested in the space, who made their money in other industries and now are interested in putting it here. And that's where we see a lot of seed investors or angel investors, and they are usually high net worth individuals. So if you work with a group like any of us here who often have access to those people, we can help you connect you to those. So if you have other tips.
Yeah, no, that's excellent. That's great advice. In that range of, under $1 million, when you're asking for $500,000, you really want to think about that, because the investors that are going to look at something under $500,000 are not the investors you want. So you want to look to 3.5 million at your low end. Okay. And if you think about that 3.5 million and you look at that and you say, look, I really don't need that much. I don't want to get in bed with somebody at that level. I don't want to do that. We're going to show you why that's not going to work. Okay. You want a serious accredited investor. You want people that know what's going on. They know the game. All right. A way to do that, besides finding that 3.5 million guy or group, is to look at syndicates where individuals that have that smaller amount of investment, capital investment, 300,000 to 500,000, come together to form one cohesive group. They're accredited through a bank. They're validated. The background, is searched and ready. And that group comes together. They form a coalition, and then that can be an investor. That's the only way I would say to get that entry money in, especially if you're a new business. You really want the seasoned professionals in there. So that's the first tip I'd say. The second is the alternative lenders that she mentioned. There are some good games coming out there. We have some friends that maybe even in the room right now that are able to do that. But you have to remember they want something from you, the alternative lenders. You need a personal guarantee. It's high interest. You need land, collateral, or some good profit on your bottom line. If you're not there and you're looking for a seed round, then what we do as a business, and I'm sure your company does as well, is we position that business and we position it with a pitch deck that's really strong. And that pitch deck is going to say, tell me about the people in your company. Validate them. Why do I want to give that person money, right? Second thing you're going to look at is the replicability of that model. Is this something that you can replicate and we can find franchise investors? There's a second one. And then the third is the differentiation of your product. It's really, really important that you have something in there that nobody else has. If you can't pitch that, we can't fund it. I mean, just flat out. Now, if you need help with that, we have people that do it. We work with experts, the branding experts, operations experts, obviously, and then we've got a great, strong legal team that will help you position that. But those would be my tips for you on that.
And so I'm going to come in from the tax perspective. And so number one, do your due diligence on whoever you're trying to seek money from. Because if their structure is, if they have issues with their structure, it'll eventually come down the pipeline. And another thing, debt financing to me is always more attractive to the person that's seeking financing because the interest that you pay is deductible. Whereas if you do equity financing, it's going to be included in your taxable income. So it's as if you made the money already. So I would suggest to give up a little, because what you're going to get back in return is going to be so much greater than, keeping the whole thing.
So if I do another little sampling, are we going in the right direction? Is there anything, maybe I should ask a yes or no or raise hand thing. So raise your hand if we should keep going in this direction and get more specific, or if we should broaden it a little bit and go another way. Let's start with, should we keep going in this direction with this scenario? Okay. Okay. Yeah, what?
So I only have like about $250,000 of my own money to invest. So I never really thought about going for a 3.5 million because typically they want you to have 10, 20, 30%, and I don't have that. So is it still an avenue you can go down?
We have to look at a whole picture. So yeah, absolutely. We need to look at the business. We need to tear it apart, tear you apart. That's out of love, I swear. But we want to go through every one of those areas. So when investor comes in, they're not just validating that business and the opportunity there. They're looking at the forecast, they're looking at past results, and they're looking at you, and they're looking at you hard. They have to trust you, they have to love you, so we have to position that strong. So yeah, if you have $250,000, what is your business?
I'm going to actually start a direct sales company.
Okay.
Like an Herbalife or
So you're getting ready, you're looking for seed round, let's get this thing going. Okay, so what I would say on that is to find strategic partners right off the get-go, put that in your portfolio, and then you're gonna validate yourself really strongly. So now when they look at you, he's gonna have a team of individuals that have some strength. And pulling a little bit of cash from all of these, they don't have to be managing partners. Okay, they can be 10% equity, whatever, but they give you a little bit of cash. They help you go. We can help you connect with those sort of people that are actually working partners to get you off the ground.
That sounds good. If we use a comment, that's not a bad scenario. If we start with somebody who's got a little bit of a capital like that, and sort of use it as a case study and run through some possibilities. Let's start back at that end of the table and show.
Sure. For businesses that already have, some funding, whether it's you bootstrapped it yourself or friends and family, that actually opens up a tremendous amount of doors, because when you just have an idea, it's great, and a business plan is great, but investors look for something they can touch, that's tangible, so results matter. One of the things that we talk to clients about all the time is, where's the business behind your idea? You can say, I've got the best idea for the best product that the world has ever seen, however, how does that turn into a repeatable and scalable business? And so I think that's really important. And those who've already received some funding and have started operations, you'll be able to point to what you've done. Like, my product has traction because we've sold X amount, or we're distributing to here, or whatever those metrics may be. Now, they may be small, but they are something to point to. So those who then would bring you more funding after that, they understand that, but there's something to point to. And as she mentioned, different set and different types of people will invest at each of these varying stages, whether a debt lender or an equity investor. Some only like to do early stage, initial investing. Some of the accredited investors that she mentioned, they focus on those types. And then there are others that want more mature businesses, and they only, focus in that stage. So when you have that a little bit of capital in the beginning, put it to work. Don't boil the ocean and try to do everything with that. Get your proof of concept going, get some measurable metrics, whether they're financial or operational, what have you, so that you have something tangible to point to then go to the next group, whether it's a financial institution or individual investors. Your deck, as she mentioned, which is the Bible, you have to have a really good company deck. You have to be able to tell your story, know your numbers, be able to, you all, I'm sure, have watched Shark Tank, right? And the people who go on there who don't know a simple answer to a question about their business and their number fail every time. So no one's going to invest in you if you can't speak with authority on your business. So take that capital, put it to work, have metrics, and then that will give you something to go shop to others who will give you far more favorable terms and access to the bigger numbers that we're talking about here.
Yeah, that's great advice. Branching off that was a perfect answer. We trademarked the term business synchronicity, and we did that with absolute deliberation, because in this industry, especially cannabis and hemp, I know how many of you have experienced a partnership or a friendship that just kind of moved your business forward a little bit, it was kind of an unexpected happening. Have you met anybody? Raise your hand. Yeah? Okay, this is a great relationship business. And with that being said, because we are fighting a legal terrain, we are in a tax implications, the change and the volatility of the industry, whether it be CBD, whether it be cannabis, whether it be anything that's coming out, because there's a lot more coming, it's going to keep changing. So with that being said, I believe highly in business synchronicity. Line yourself up with those that fit the space that you're not good at. It's just a simple business rule. It would lay over any business. I'm really good at my concept. I can figure it out. I've got this great vision, but I may not have a financial backing, or I may not have a real estate area. So find those partners, line up with them. If you can't find them, come to the network groups, get on some of those. We have some, I'm certain she has some, and let's line you up with people that can take you to the next level a little bit quicker. Second thing she mentioned that I want to hit on is proof of concept. How many here have a proof of concept moving? Okay, 4, 5, 6, 7 of you. All right, and then how many of you are past the proof of concept phase? Okay, several of you on that. So proof of concept is critical, and when you're laying that out and you're doing it, you don't want to just think of it as market share. I've heard this over and over again. Market share is important; it's a critical component. But if you really want to get that business strong, you want to make sure that those bottom line numbers, those net profits, are showing. You want to really focus on keeping your expenses, costs low, not so much to get out, but show profitability. And then as you expand, that's when the investors are going to be more and more interested. We've had a lot of people with really amazing concepts come to us and want to either franchise their business or do a capital raise, and we've had to say no because they don't have anything in their bank. Now, we've worked with them. We have people that we send them to help them build their business and create the network. We don't just tell them to go away. But if they don't have that structure, they can't get to the next level. So we just emphasize proof of concept is critical here.
And so I want to say the first thing I feel like is very important that I see a lot in this industry is the lack of structure. So I think that the structure needs to be very important, and structure meaning, are you a corporation, an LLC, a partnership, because those have major tax implications. So once you have your structure, now the business that you may be partnering with or getting finances from, you want to know what their structure is, because that also determines whether there will be future tax issues. And you also want to know, so most people here are just in the CBD space, non-plant touching situation, I'm assuming. But if you're not, if you're non-plant touching and the people that you're partnering with are non-plant touching, that's fine. But if the people that you're partnering with are plant touching or have a leg of their business that is plant touching, their entire business can be recharacterized as a plant touching business, which would then affect their partnership or however the joint venture with your business. So to me, it's very important to know if you're going to have a corporation. Just an easy thing, corporations tax twice. Once when the money comes in, 21% flat rate, and then the highest rate, 20% when it's paid to the shareholders and the shareholder. The beauty of a corporation is that it's its own entity, and if there's ever any issues, it rests with the entity, for the most part. But, I mean, plant touching issues, it rests with the entity, it does not come to the individuals. If you have an S corporation or an LLC, you don't get that protection. So if there are ever any issues that come up, whether you partnered with someone and they didn't file their taxes correctly, if you are a pass-through entity, which would be an S corporation or an LLC, 10 years, 15 years, 20 years down the line, the IRS could audit the company, and then it will translate to you as an individual, and it'll bankrupt you. And so I think it's very important for you to have your structure and internal structure in place, and then to also know the structure of the business that you intend to partner with, because the tax implications can be huge. In this industry, just a plant-touching business can be taxed up to 70%. So you need to, this is very important because there's a case that happened in the end of 2018 where they were reviewing their 2004 and 2005 tax returns, and they were a pass-through entity. And it's still moving through the channels, but if you can see that it can go back that far, and it can affect anybody that they partnered with.
Is that a percentage of ownership? Is it over 10%?
No, it's just so for instance, that was a tax. Well, it was an LLC. So the individuals are paid, there's no entity level tax. So when you are preparing the 1065s and then giving the individuals the K1, when you prepare the 1065 and say, okay, well, my taxable income was $100,000, but then the IRS recharacterizes and says, no, your taxable income was $500,000, and then you own 10% or you own 5% or 3%, if you took it at the $100,000, then you would only have gotten $5,000 as taxable income if you own 5%. But if it's at $500,000, then you have to have 5% of 500,000, and then you're going to have accuracy-related penalties, and you're just going to have a slew of issues, and that comes from the structure.
So, are we talking about
280E is cannabis because it's a plant-touching entity, but if you are working with a business that does both, if they are not separate entities, like say that there's the hemp leg and there's a cannabis leg, but they have like a management company that has all the employees. It's basically going to be characterized as doing business.
Okay, I'd like to introduce Pat Murphy. Came in a little bit late. His flight was delayed. Go ahead and introduce yourself, Pat, and then you could also follow up with the next phase round here of questions. And I think we should include some mid-level companies who they already have proof of concept. They're looking for growth capital. Give them some suggestions.
I apologize. Is this on? Can you hear me okay? Apologize, kind of a late flight, so she just pulled me out of the audience to come up. So, my background, I'm a commercial real estate developer, and 12 years ago I lost my wife from the treatment of breast cancer and got involved in alternative medicines. And interestingly enough, when we decided to do this, we got a group of us together that had similar experiences. So everybody that's in it is an investor that's all retired former presidents of companies, and decided, do we want to go, which route do we want to take? Do we want to raise capital, or do we want to do a small privately held company? And we chose to do a small privately held company. So we have a very small group of us. Our goal is to be on the cutting edge and not the bleeding edge. We're funding through revenues. And it's a very interesting concept because one of our particular investors, who's a celebrity, if I said his name, her name, both of them, you'd know, got interested. I actually met him at a New Year's Eve party in Havana, Cuba, and decided that they wanted to be involved with this. And most of us are doing it on a philanthropic. We want to do organic pharmaceutical grade medicine and give it away for free. That's what we're doing. And we're doing it in Colombia. We got really kind of tired of the organizational structure and waiting in the U.S., and I had some background history. I was the first international expansion for RE/MAX, so we put in 43 offices in 23 countries. So we looked at Colombia, and we have a grow operation in Colombia, and I'm originally from Iowa, and so we're also doing it in Iowa. So it's very interesting in our structures the way that we did it, and it's interesting to hear you talk about S-corps, and because the legal structures in Colombia are much different. So, we've even got an international firm, Grant Thornton. We looked at Price Waterhouse also to do our international audits, and we've got our structures in place, especially in once we get rolling in terms of issuing our dividends and how we're going to do that. So, anyway, what we did is we took a handful, or I think there's 7 of us, and we put our own money in, and we went to China. We've got our extraction machine. I'm really on the business side. We've hired probably some of the best consultants in the country. And in 2020, we've already had a meeting with, she was the lieutenant governor, the first woman governor of Iowa, and our former governor, who was named Terry Branstad's a very good friend of ours. Some of us were large. He's now the U.S. ambassador to China, so we're looking at doing some things between China, Iowa, and Colombia. So we've got, you could poke me and get me to quit talking here, but I can share with you how we went about it. We looked at some of the entities, just to give you an example, some of the entities in Colombia who had promised their investors had raised millions, and they were specifically Canadians, promised their investors that they'd give them money back in a year, and that was 2.5 or 3 years ago. So we really took our time, and the majority of us, I'm going to give away my age here, are 70 plus, but except our Colombian partner, who's 27, and his best friend is Iván Duque, the current president of Colombia. So we went the political route and tried to go backwards, and we're also doing it on an education basis. I hired a medical director. We're going to do education within Iowa. We're building an 80-room hotel with a hemp museum made out of hemp in Iowa. We're going to put an education center in there. I'm a former school teacher, just to let you know. And we're also going to do our lab in there, which is going to be a DEA lab. One of our partners is the mayor of the town, and a former DEA guy, Sioux City. And then we're going to go ahead and also put a restaurant there. So we're going to be doing a lot of different things in terms of what we're going to do in terms of growth with the company. And the two should have synergies, we're hoping. We'll see. In this business, as you well know, I think of it as a baseball player. Having played baseball in school, if you're up to bat 10 times and you hit .333, you're in the Hall of Fame. So you can expect to strike out 7. So if you go in with open eyes, I think, and you're going in for the right purposes, I think you'll see that there's success here. Anyway, excuse me for kind of coming in late and overtaking the panel.
That was great, Pat. That was great.
Yeah.
So I think what I think might be a good idea If somebody wants to share their actual scenario that they're in right now and get some actual input as to what they do, we can maybe take about 10 minutes to do that, and then 5 minutes after that for everyone else to ask questions about it. And does that sound good? So does anybody here want to actually share, vaguely speaking, or however vague you want to be, what your scenario actually is? That's mid-level growth. Somebody over here, I think I raised some hands. Anybody want to share their scenario and then have them give you suggestions on a good growth model? Yeah? Do we have a microphone for the audience? Okay, let's see. I'm going to bring this to you because no one's going to hear you.
So last December, there was two guys that decided to get a permit. We're from Pennsylvania, so we started this group of 7 now. And the way it was started, we decided to benefit the local community, which is agricultural, Lancaster County, Pennsylvania. It's somewhat of a plain community, as Ohio and Indiana, as you might know. So our goal was to, and we're all entrepreneurs, we all have our own businesses, kind of like you, and we came together and decided that we're going to form this farmer co-op, and that's what we did. So we got about 20-some farmers and grew about 60 acres of hemp CBD, and turned out really well. Obviously, we had to really vet the seed suppliers, so we all put our own money in, raised some hard money, purchased a dehydrator out of Oregon, commercial dehydrators. And so we're about $1 million in the hole, most of our own money and then also some hard money. So our next step is to pay the farmers, obviously. We're biomass rich and cash poor. But somehow we keep limping along, and it's really been exciting, to say the least. And so we're looking to get some extracted. We have our own line as far as CBD and some other products too. So I guess what my question is, from our standpoint, how we raise additional capital when the lenders aren't able to do that for us yet, and also pay back our debt so we can pay the farmers and so forth. So,
yeah, let's tear this open.
What is your profitability at this point? What would you say you're putting on your bottom line?
what's our bottom line? Currently, with the employees and everything, with the staff that we're hiring to dry this hemp, we've dried it probably about, we have about 45,000 pounds of biomass currently.
Okay.
And we are, our costs are about 25,000 a week. So with all employees, the propane for the dryer and everything that we're.
Are you on the, my point is, are you profitable or not profitable right now? Are you going further into debt with your own cash, or are you becoming profitable?
We are not profitable yet,
Not
no.
Okay, I just want to differentiate. So we're not profitable, but you've got a good, strong forecast going forward.
Correct.
Okay, and how much history, how much time in the company so far?
How much time in the
How
company?
much since you started? What was the date you hung your your
Oh,
shingle?
March,
March of this year.
Yep.
So you're brand new.
correct,
You've got things going. You need equipment financing as well.
correct.
Okay, and what are you looking for in a raise?
Well, now listen to you, we should probably raise $3.5 million.
Good answer.
We'd be happy with $1 million.
Yeah. So you want to forecast it out, and you want to take. Yeah, I'm gonna let's let my colleagues talk.
Yeah, and the whole point is to be vertical integrated, so, you know, eventually have our lab and have everything right there in the local county to benefit the farmers a little even better, rather than having some big commercial outfit coming in and buying everybody out, so.
Right. So how many partners are there right now?
7,
There's 7. And how's the split on that?
15%,
15. Okay, so it's pretty right down the middle. There's no single.
correct.
Okay.
Well, there's one at 1% because we needed to sign a lease through the municipality to get that dryer in, but
Ah.
there's tricks.
Is there a managing partner here? One managing partner, or is it equal? Say everybody have the same rights.
We have managing partners and, yeah, and so forth, CFOs, yeah.
So
Okay.
I didn't want to. I wanted to know what your structure. So you're it's a
It's an LLC.
okay, and is it it's okay. I would say that you should probably you should look at that structure again, because your liability right now is going to be huge, and there are ways to accomplish an LLC Like everybody splitting, you know, the 15%, and then that another person having 1% and still get corporate protection. So I would look at that again, because in this type of industry, and especially because you're producing a product, there's product liability. So anything could happen, and if something happens with that, it's going to go to you guys individually, because LLCs only protect against certain things. So I would put a layer of protection.
And what, as you're looking forward, what would be your goal in the next 18 months? What do you want that capital for exactly, and what do you want to happen? What do you want this to look like in 18 months? Just give me an outcome.
What we'd like to see is having our own, our own lab extraction facility, so we can keep everything local, and also possibly do white labeling, because it's more than we can handle. And we have farmers knocking the doors already for next year. So
you have clients lined up already? Yeah. Okay.
Pat, what advice would you give him, Pat? What advice would you give him?
Well, I mean, if it's a capital raise, I think what you've got to do, and having had my securities license, there's a lot of directions that you can really, really go. You can put all the projections in the world together, and good VC people, what they'll do is they'll look through your projections, and usually it's an executive summary and then a financial executive summary. They'll take a look at that, they'll look at all the numbers, and then throw all the numbers away and look at the management team and see if they can execute. It's all about the execution and who you have on your team.
And let's talk about your area too. How many what's your competition look like at this point in Pennsylvania, Ohio?
In Pennsylvania especially, there was maybe 2 or 3 other co-ops, but not the size of ours.
Okay,
So,
there's
and
a
2 are probably going to
differentiation
fold.
right there. You're going to plaster that all through your pitch deck. Okay, because if you're the first, you're going to move quickly. If you have the capital behind it, you can take market share, correct?
Yeah, and the other thing we didn't do was put our name all over the news, because we didn't want our head above the hole and get it shot off first. So we were somewhat, low, and left the other guys do their thing, but now they're the ones that are getting sued and everything else. So we want to make sure we had a solid foundation, first of all, stand true to our word, and then deliver. So.
Good.
Tina, anything to add to that?
No, I think what he said is dead on. There are a bevy of types of investors that would come in and help you with growth stage capital, especially if you're looking at CapEx procurement. There are actually quite a few now getting into equipment financing in the industry. In addition to, you can look to equity investors. There are several, especially Pennsylvania is a state that is sought after, highly sought after by folks who are making state-by-state investments in this space. So I think you'd have options, but he said it well. It's all the management team and your plan for execution. Every founder, and I founded my own business too, and I'm guilty of it all the time. I talk very altruistically about our business, but what investors want to know is, how are you going to do it literally? How are you going to move it from A to B, and how does B make money? And if I give you money, where's my return on investment? I once sat in a panel and someone said, don't worry about your exit strategy in the beginning. And I think that is the worst advice to give anyone. Because if you take investment from a bank via debt, they want to get it paid back and they want to know how. You take in equity investors, they're going to want to know, how do I get my rate of return in the future? So you have to think about an exit, because you have to be able to answer that question. So, and the forecast is a part of that. It's what we finance nerds use to say, to quantify that. So that's why I said earlier, you have to know your numbers so that you can speak to that. So if someone says, hey, I'm going to give you $1 million, you can tell them how you're going to give them 5 to 10 down the road.
I might say, in addition to that, when you're on the initial raise too, what you're doing is, create a value for what the initial raise is, because the people coming in later on the second round, their value may be less, or they may be paying more than what the initial seed people paid. And you need to be able to explain that. Yeah, you need to be able to explain that. So you have to hire somebody that can explain that. Hire somebody to do the analysis so you can explain it in your pitch deck.
And I said it earlier, know how much you really need. You just said, well, we'd take $1 million. And the reason why that's important is for what he just articulated, because you're going to need more money as you continue to grow. Every business usually has, from the beginning to when they're fully sustainable, there's usually a few rounds in there. And how those each are priced is dependent on how the one before went. And so oftentimes, if you don't raise enough, it takes a year sometimes to raise money, depending on the size and the type and the complexity and all the things. And so if you don't get enough, you're perpetually raising money. And as a founder and as a business owner, it's so distracting, the process. So it's going to take you away from your business. And so then you're in the middle of a fundraise, you need more funding, and then it's going to be a debate between those who are coming in as to, well, I want to get in on that price, not on this one, right? Because your timing is overlapping. So ask for more than you need. If you're going to take the dilution and you're doing an equity raise, ask for more than you need. We always say at least 18 months of capital, if not 36. But make sure so as you think about, $1 million sounds good, but it sounds like, you really might want to think through more. And then, as he said, have a valuation expert help you with what to price your round at.
And I challenge you, for anyone who's looking for a raise that's under $1 million, maybe it's $500,000. Let's see what other ways you can raise that capital other than a capital raise. What are the things you can do? Okay, there's a lot of ways to generate revenue with a farm, with a lot of these businesses here. You have to think a little bit out of the box, maybe to get you through 6 more months to show more on paper, and then go for your capital raise. So there's a lot of other alternatives out there, and we work with enough people that I think we can help you kind of be a little more creative in your thinking from the get-go.
Yeah, there's two things, having started many businesses, there's two things you can be assured of. It'll take you twice as long as you think, and it'll cost you twice as much money. Both of those things are very important to remember. So in a pitch deck, what you want to do is do 3 scenarios. What's the worst thing that can happen, and can you live with it? Here's what we actually projected, including sources and uses of what we're talking about here and how you're going to use the money. And here's the home run. So at least you're not painting a picture that, here's a home run to begin with. You're actually explaining to somebody, here are the 3 options, and here's, if you can live with the worst one, then you might want to think about getting in bed with us.
Right. And I just want to add, which I find to be very important, get the professionals involved early. Get the attorneys, the M&A people, your finance people, get everybody involved early, because when you're 1 year down the line, the cleanup work it's very difficult. So if you can, at this stage, I'm not going to say pause, but if you can get the professionals involved to clean up whatever happened before, and then to have it clean moving forward, that is my #1 suggestion, because that will definitely save you a lot of money.
So if we could,
I think she had a question in the back.
I do, but are you going with Q&A now?
I was about to try to get a criteria first to go to credit. Okay, we'll go straight to you first. So, can you describe a brief scenario where you could definitely get that funded? One each, real quick, 1 minute. What would it look like for you to say, I would give money to that?
If you have a
What are the criteria?
differentiated product and profits, it's the two. I mean, just to sum it up as quick and easy, if you have a differentiated product
He doesn't.
and profit.
He is not profitable.
No, I thought this was. I thought you were just saying.
Oh yeah, just basic in general.
Yeah.
So if you have to make some changes and build it to look, if you need to morph your company, basically what I'm trying to get at is, if you need to morph your company a little bit before you get up and talk to these people and talk to people who raise capital, what should you be changing, and what should it look like?
I think Dina's comment was really, really good, because find out what the niche is. We've always been niche people in our group, so we're finding out, and be careful with vertical. I mean, you can do too many. I've seen so many people fail already because they wanted to do too many things all at once. We decided that we wanted to be the best growers with our Iowa farmers and the best extractors in the world. We'll get to the other stuff later. So focus on one thing until you make money. And so we've got some other ideas of what we're going to do too, in terms of what you said, and I think that was probably good advice. I mean, look at what Florida did already. They went from vertical to horizontal because they can get more licensing fees by horizontal integration of what they're going to do. They're going to be separate extractors. There's going to be, that's kind of the direction. I don't know if the rest of the states will do that. We have our Iowa guy doing our Iowa operation, and I'm doing the South Americas. Illinois is the states.
All right, let's take questions.
I'm not going to use the microphone. I can talk really loud. Thank you for all the great advice, first of all. I've been taking notes. I'm sure everyone here, phenomenal. So very specifically, a question for me in my business, doing the structure, double C core, all that. I had the opportunity, instead of raising capital, to take sweat in exchange for equity, and it would be in very specific areas of expertise: contract manufacturing and advertising, branding, agency, SEO, all of that. So I'm doing consumer-facing business. What are your thoughts on that? Because I've heard people who are adamantly opposed to it. They're like, they'll raise capital and get proper investors versus doing it this way. So I just kind of want to get the feedback on, you know, upsides, downsides on this. You're smiling, so.
I can just tell you, if your business is already, if you have capital and you're giving someone, or if you've already gotten investments and you're giving someone sweat equity, it's going to be taxed as ordinary income. The only time sweat equity is beneficial is before your business gets any money.
No revenue.
No revenue at all.
No pre-money, pre-production.
Pre-money, pre-production, that's when it's beneficial to do sweat equity, because sweat equity is taxed as ordinary income. If you have no money, then you're getting $0. And so the highest ordinary income rate is 37% right now. And the highest dividend tax rate or long-term capital gains is 20%. So that's a 17% difference. So no money, just at the beginning, sweat equity is great. Any money, sweat equity is going, people don't really expect that you're going to be taxed at, you know, you're going to be attributed $100,000. And if your structure is an LLC, no matter what happens throughout the year, if you have profit, so if you make $100, you have $50 in expenses, $50 of equity or profit left over, even if you don't distribute it to anybody, it's still going to be attributed to each individual person. So that's another issue with structuring. You need to understand that you can have phantom income and still be taxed on it. And there's some people in the hemp space and in the marijuana space, they've been paying, you know, taxes on money they've never seen.
I would say two things. Have a good attorney write up your equity agreements. And the thing about, I think sweat equity to vendors, for lack of a better word, or people who are going to help you, is good, especially when you don't have cash, right? However, just remember that they stay with you forever. So that's why I'm saying giving someone equity is making them a partner in your business, making them a shareholder in your business by giving them ownership. And so how you structure your equity agreement, that's what I'm saying, ask a good attorney. You know, write some clauses in that you have the right to buy back, or there's performance metrics or something, because we've had many clients who their cap tables were really intricate as the years went by because they did that so much, and they didn't even like those people by the end because whatever work they procured from them and ended up not working out so well, and then they're an owner in your business. And so when you sell it down the road for 1,000 times your own money, they get to participate in that. So I would use it very selectively. Where I think it benefits is when you want to hire people, when you want key executive team members that are going to be on your team and operational to you. When I see it very often that equity is given to those in the beginning because it gives them a sense of, I mean, they are owners, but they're a part of it, and they're a team member, and that's someone that, you know, will be with you in the long term. Doing it for vendors, I would do it. My opinion, my advice would be to do it selectively to protect yourself from not having so many people.
Certain amount that, because eventually I want to do Series A, that, you know, is acceptable to an investor group to say, oh, you've given this amount of equity to a vendor.
I would say 10% at the most. Usually we see like a pool of equity that you're giving to employees or vendors or, you know, whomever is usually about 10%. So I wouldn't go over that threshold. And just even irrespective of what investors want, my advice to you would be don't dilute yourself, you know, beyond that for someone to provide work to you.
Sorry. Do any of you have any experience or have aligned anybody for research grants or that type of funding? I know that's not the sexy side of making money, but I'm a researcher and in the academia world.
That's actually a very good question, and the answer is going backwards. What we did is we hired both 4 universities, 2 of them in Iowa that we're using, and 2 in Columbia to do clinical studies. And I hired a medical director. So what we're doing is we're doing clinical studies on the biggest issue right now is dosing. So when we get to that point, we'll be looking at dosing. We're even looking at an NFL lineman isn't going to need the same as a 100-pound model. And obviously everybody's body reacts differently to medicine. So we're doing the studies. In fact, I sent a message now. I sent the message and there was no response, but I sent it to Jeff Bezos at Amazon because they're doing body scans with your camera, you're going to be able to do body scans and buy clothing. So we said, why don't we do a joint venture with you, and we'll look at your body types and match it with what we're going to do in our clinical studies to see if there's actually some, relevance in dosing. And we could do a regression analysis or something and find out exactly, if there is a relationship to body types and dosing, which we think there is.
I think we can hook you up with some genetic partners. We've got
Yeah.
that might be helpful.
Okay,
We'll swab tests on them now
Yeah,
to see.
we'd
how
love to
the
do
body-
that. We'd love to do that.
Okay.
My niche is, I'm in the pet industry, so my
Right.
research would be on animals, so dosing is very difficult to do. But getting grant money for the research is even harder. Because so much is being done for humans, and that's in its infancy, so just getting money for animals is pretty hard.
There's a group that I met with, her name is Lane Yu, she's out of Newport Beach, and they're a group of farmers out of China, one of the larger corporations in China. They've been feeding the shiv, the stock, the bass, the cattle for the last 10 years. And of course, you get the omega-3 and omega-9 when you do that, but it's illegal here. So we talked about a little bit about seeing if we could get a grant and then doing it through China and a university study here. So, and that's, this business, if you think about it, it's really no more than 3 years old. I mean, we've been growing here for 3 and maybe 5, but some of us have been kind of had our nose in it, looking at it for different reasons. So I think that possibility is there. It's not there right away. I know one of my high school classmates in Iowa owns one of the largest pet distribution facilities in the country. So. I would think Iowa State, animal husbandry would be the place. Yeah. Yes, absolutely.
Do we have time for one more question? Yeah, go ahead.
You know what I'm going to say? I'm going to say franchising all over the place. I'm smiling because we are looking for spas right now to franchise. We want to find a CBD spa. I have more clients that I can tell you looking to line up in that area. Plus, we have distributorships to go through and supply. So we definitely are seeking a spa model to franchise, okay? And the reason I would say franchising all the way is because let's look at your business. You have one store, right? Okay, now company built 5 stores. Now you've got 6. But you're managing all of those, all the cost structures. Nobody has any ownership. You franchise that model and you have 6 guys out there that own their own piece. They're proud of that. They're going to profit way higher, and that we can prove those numbers. But let's take those 8% royalties and multiply this concept 100 times over the U.S. And they own it. You aren't managing the day-to-day. Okay, then the next step, besides those profits, comes from your marketing, right? So when you're spending all of this money on marketing, and now you've got 3% coming in from each of these franchises to grow your national brand, and they're indigenously marketing. If I'm big money and I'm coming in 5 years, who do I want? I want 120 spas that are profitable across the U.S. I'm not going to go for the one dispensary, even if their profit margins are 40%. I'm going to take that mass impact, profitability, replicability, differentiation. So all the way I'd say to do that.
I'm going to play the devil's advocate here with 40 years of franchising business and having been on the senior management of Century 21. I would say no. I would say do affiliation agreements. And the reason is because when you get started in affiliation agreements, and the attorneys can tell you this, just to start a franchise, it's probably going to cost you at least $250,000 for uniform franchise offering.
$95,000 for a full package.
Whatever it is. So what you've done is, how do you expand? There's two ways. If you're going to franchise, you can start from the outside in or inside out. Let me give you the example. In the late 70s or early 70s, when Century 21 did it, they did the Walmart approach, went outside in. RE/MAX took the 18 major metropolitan areas and went inside out. So you've got to figure out what your strategy is. Now, what happens is if you want to grow a franchise, how do you do it? You either give away the regions early on and then create value, and then you can sell the regions, because generally you don't have enough capital to go out and franchise right away. So that's one approach that you can take. And the affiliation approach, if you can end up owning 50% or 49%, then what happens later on, and I'll tell you why, because I was on the acquisition team of our regions in 1985. The idea is for the founder, of course, and you know, it's the last legal multi-level marketing is franchising, basically. And what you really need to do is you need to go back and buy those entities so you've got something to sell. And you can look and see what happened later on in the franchising business when Realogy or Sendan or those people acquired those corporations. I'll give you an example. We had 275 offices in Florida, Century 21, and I offered him $15 million on the Century 21 side, and Sendan came in and offered him $30 million 2 years later. So you've got to be, you know, your structure is really important. If you have the time and the money and the people, franchising is good, but you've got a lot of regulatory things, and I guess I'm over it.
You know,
We actually have to wrap. We're 10 minutes over, and they need the room. But I would suggest that the two of these, I think there's a very good creative, like third version between the two of those, duking that out. I think there's something to watch there. Just saying. Thank you very much. See you on the next one.